But let's address then some more news, and in particular, the fact that the government has hiked the natural gas prices by about 40%. This is going to affect the CGD network expansion. The new prices are effective till March. Let's connect with Kirit Parikh, economist and chairman, IRDAE, as well as DK Saraf, the former chairman at ONGC and PNGRB, and Probal Sen, VP Equity Research at ICICI Securities. Thank you all so much for taking time out and joining in. To begin then with you, Mr. Parikh, I just wanted to understand your outlook on the same. What is your take in terms of the update on the recommendations report related to the gas pricing formula, and when will the final report be submitted?
You know, the committee was asked by the government to submit the report on APM gas prices, this allocated field gas prices, which is currently sold at a very, fixed at sort of government determined prices. And that was to be given in 15 days. We found that 15 days was too little a time to give a reason and credible report, and we have requested the government to extend the date for giving the APM report by 1 month. So meanwhile, it was the government's commitment was that they use the formula that they've been using to set the price of APM gas, and that new price should be effective from October 1st, and that's what the government has done. So there has been no change in the existing rule, but we hope that by the end of this month, we will give our report about APM prices.
Sure. Mr. Saraf, if I could get you in, just wanted to get your views on the gas price hike, its impact, and in particular, if I could ask you how beneficial this is going to turn out for ONGC.
Yeah, so far as the CGD companies are concerned, because you just mentioned that it would have an adverse impact on CGD distribution network of the country, it would definitely be a negative for the CGD sector, and the situation would be very difficult for the CGD companies, this price hike, because the price hike is as high as 40% this half year, and they would perhaps have no other alternative other than to pass on a major increase to the customers. But we should also not forget that there is a wide gap between the price of petrol and diesel versus CNG. It goes as high as more than 50% for the cars. So this we need to consider. So which means that there is enough capability of the CGD companies to pass on this increase to the customers. However, with this increase, there would be a very difficult decision with the customers, the potential customers of CNG, to convert their gas from petrol and diesel to CNG. So having said that, now the impact on ONGC would definitely be positive. And in fact, they have been having very low prices. In the past, it was as low as $1.79 for one complete year. And also, if we see the history of price increase on the so-called APM gas during last 8 years, the CAGR of increase in price has been not very high. It has been only 6.6% during last 8 years, which represents the normal inflation also. Now, Mr. Parikh, the report would be given along with the recommendations by Mr. Kirit Parikh. He is a renowned economist. He has so much of experience in the energy sector, and he has given so many earlier reports also. Now, the solution which lies is that to deregulate natural gas prices as well as natural gas distribution by the government. And in fact, I met Mr. Kirit Parikh virtually, and I also made my own suggestions to him, which is on the same lines. Now when the prices are deregulated by the government along with the allocation, the prices of natural gas in the market would increase. But at the same time, the another recommendation should be that there should be a windfall tax on ONGC and Oil India and other gas users, so that government can mop up this extra profit. And this extra profit should be utilized for giving the subsidies to fertilizer sector as well as to the CGD sector.
Right, Probal, I wanted to get in your take then, just taking off from that. Do you think that this gas price hike has been in line with expectations, and what do you believe is going to be the impact on the likes of ONGC, Oil India, Reliance Industries on their EPS?
Okay, so I think in terms of absolute numbers, this number is actually a little bit lower than I think what calculated numbers are suggesting. Keep in mind that one or two of the parameters, which is Canada's Alberta price and Russia's domestic price, which form the weightage for the domestic formula, are always a little bit of an estimate. So the price actually that we were expecting was $9 plus, where it has come as 8.6. Having said that, there were also some expectations, as the esteemed gentleman, Mr. Kirit Parikh, is already there. We were expecting that till the committee delivered its recommendation, there was a possibility that this October iteration of price increase be kept on hold, but that has not happened. In terms of impact on EPS, I don't have the exact numbers, but obviously it will be every dollar increase in average realizations, particularly for ONGC in gas prices, is typically a 3 to 4% enhancement in standalone EPS. So this is almost a $2.50 increase. So it's fairly significant in terms of an EPS impact for ONGC. Reliance, of course, E&P is a smaller proportion, so it's just this increase is negligible in terms of overall consolidated EPS. It's probably less than 1% in terms of annualized impact. I think more importantly, from the CGD perspective, and this was mentioned by previous participants, I think, the increase needed in CNG and domestic prices will be in the region of around 9 to 12 rupees per kg and almost 6 to 6.5 rupees per SCM, respectively. And in the current environment, given the narrowing differential between petrol and diesel, I would say that this is probably going to be too much of a challenge. At best, you can probably have a partial pass-through, or the CGDs might decide to hold the price increase till the new pricing formula comes into play, and then take a call in terms of what the increase or decrease as needed will be. So that's broadly how we are looking at it at this point of time.
Mr. Parikh, we are running very short on time, so I'm going to club two questions into one. A, what is being considered in terms of discussion on the new gas pricing formula? And also, what is the objective of the review? Wanted to understand what is the agenda that the government is keeping in mind while considering the review of the formula. And obviously, I want to get your thoughts on the recent gas price hike too.
Yeah, I think the question is that what is the committee thinking? Well, we have really four major stakeholders in APM gas prices. ONGC is one, government is another because it affects its finances. Then we have CGD users, and then fertilizer manufacturers. Now, fertilizer manufacturers are not really affected if the government keeps the price for fertilizer users the same and compensate the manufacturers for the difference. On the other hand, the CGD fellows would certainly be affected. They would like the price to be as low as possible. The ONGC fellows would like the price to be as high as possible. Now, government has a slightly as a mixed impact on this, because on the one hand, yes, ONGC price increases its burden on subsidy, but at the same time, it also increases its maybe a share of ONGC profits. Hopefully, ONGC will make corresponding profit because of the profitize. So we need to consider all these considerations and then balance it. And of course, our objective would be to really have a gas price policy that is in the interest of the country and which helps us reach our target of a gas-based economy up to some point.
All right, gentlemen, appreciate your time. Thank you so much for joining in and giving us your perspective as to what exactly this gas price hike means now at record highs. All right, let's shift gears then and move away